Good morning, everyone. Happy Saturday. It's 7:30 a.m. on the East Coast. Prices of BTC currently at 7,365. My name is Amol, and if you haven't been catching my BTC analysis, YouTube analysis, or heard about my Cryptosomniac community right here, welcome to the channel. Welcome to my analysis. Okay. So for the past 7 days, guys, I've been doing free Bitcoin analysis, free trade setups of what I'm doing, making everything that I do public. Again, none of this is investment advice. These are just things that I do, and if you choose to follow, you can follow. Okay, and if you happen to make some gains off that, that's because you chose to do what I do. I didn't tell you to buy or sell, but you can see in our community, I make some really great trade setups for myself, and if people do follow, they make some really good gains. So for example, here are some call options that we had for BTC yielding about 780%, almost an equivalent to 1,300% US dollar. In the first week, one of our members who had joined, he's made a profit about $1,000, okay, in the first free week. Okay, so think about what we can do, guys, if you pay for a monthly subscription or 3 months or 1 year. Okay, this is the guarantee that I can give you, is that you will learn a lot, and my trades are more often winning than losing, and even if I have losing trades, which I have plenty of, guys, I'll make sure that the losers are small and the winners are big. Okay, for example, here is my trade setup. A couple days ago, I had these positions open and I closed them, as you can see. 9% gain, 27% gain, 3% gain, 1.87% gain, 2% loss, 0% gain, and negative 4% loss. Okay, so you can see all this clearly yields more gain than loss, right? So that's sort of the name of the game, is open as many positions that will yield you more winners, and winners that are bigger than your losers. All right. So with that being said, just to give a background about myself, I graduated from Purdue University in 2013. I've been trading in the stock market since I was in high school. The story was that I had logged into my dad's TD bank account back then when my family and I were living in New England, and I was trading out of his account without him knowing. And then after he saw that I was doing this, he obviously did not like that. Then we eventually opened up my own account, and then I started trading and investing, and I started to understand what exactly is the stock market about, what exactly is, how economics works from the standpoint of the stock market, okay? And then I got into trading oil in 2012, which was not very much experience in commodities, but a little bit of experience. And then I traded, the first thing I ever traded for GM was options in 2008 when the financial crisis was happening. Again, I didn't know anything about options, so that was my first attempt. And I made a few good trades here and there, and I thought I was hot shit, but again, giving all of the money back to stock market. All right. So beyond that, after sort of learning through trial and error, through the years when I was in college, I would still trade. One of my most successful trade was trading Pacific Ethanol, which was one of the alternative energy companies that was coming up. And I made massive gains off that when I was a sophomore in college. And then I just kept learning over and over, and reading books or understanding technicals or understanding even fundamentals. Okay, but more than that, what I really started to understand is how exactly market psychology works, and that's sort of what I'll go through today. Is understanding this sort of big move up that we've had, this parabolic structure that we've had, right? So here's this parabolic move right here that's in place, right? So parabolic moves happen almost on a vertical fashion like this, and they more often than not will sort of capitulate hard too to the downside, because this move is essentially unsustainable, right? You can't just sort of, you know, drive prices straight up. In any market this has happened. There's been hell to pay on the other end, and at some point, I mean, there will be hell to pay on the other end for BTC as well. But for now, you know, prices have sort of reasonably kept up with their parabolic move, and I don't see any structural issues just yet in Bitcoin. You can see that currently at 73.50, we've had about 3 daily candles, or at least 2 successful daily candles that are bearish with sizable volume, I would say, right? But remember that, you know, this volume right here, okay, half of this candle right here, or almost 3/4 of it, was picked up and driven up by the bulls, because when you see a long wick like that and the prices don't close down here, that is essentially, you know, this big area that's a liquidity pool that was generated, and, you know, prices were brought down all the way to the 6,100 level, but pushed up way higher to close because this was all bought up by the bulls. Okay, wicks essentially let us know that people are waiting in this area, or they may have placed some, you know, low ball orders and they got filled. Okay, so I mean, obviously in this particular instance, demand was, you know, clearly outweighed supply right here. So this is why this wick, in my opinion, is far more positive than negative. Okay, selling has not sort of stopped, even though in my community I stated that I'm going to take a slightly riskier position and open small positions in these right here. As you can see, BTC 5%, Ethereum, Litecoin, Bitcoin Cash, basic attention token. And these were all, you know, some low ball orders when we were just creating our first higher lows right here, right around this area right here yesterday. So once we got those filled, you know, obviously we're up right now on all these trades. Okay, so now what we need to see is where exactly our price is going to go. All right, so let me sort of dial back out and show you where we are in terms of wave counts. Okay, so here's the Elliott wave count of where we have been climbing since December, right? So here's wave 1. This is a larger E wave count. Wave 2 right here. Wave 3 is usually a big extension, either 1.618, 2.618 fib, sometimes all the way to 4.618 fib of an extension between waves 1 and 2. So this is where wave 3 has essentially ended, and now we're starting this bigger wave 4 correction in here. But within that, we also have some subwaves. Okay, so here's wave 1, subwave 1, 2, 3, big pop, 4, 5th ended right there in May. And again, guys, these waves, wherever they stop, these are not indication of where they will end on a date. It's just, you know, a general way of me drawing it. So try not to, you know, figure out the time or anything. It's really just, you know, where they're going to go in terms of price. Okay, so I'll explain exactly why they are going to go there in terms of price. All right, so now you see subwave 5 ending, and usually after wave 5 you have a B, C corrective wave. Okay, so the B is usually a false move where prices try to look like they're, you know, climbing up in strength, and you look like you're going to go all the way up here, but really what happens is you sort of create this A. B is almost a lower high, and then the C is just a, you know, sharp steep drop, and that C will more than likely finish off this 4 right here too. Okay, so now this 4 and this C are really in an interesting spot right now, because this region right here has already been tapped, this order block right here. Again, order blocks are nothing but the sellers, you know, buying in at selling in at one point, and then the new buyers and demand stepping up and pushing prices higher. Okay, so either these sellers got weeded out and then new demand stepped in and pushed prices higher, or now, you know, there's these same buyers who bought down here and pushed prices higher. These are the same people, you know, who do not want to let go of their positions just yet until prices dig in deeper. Okay, because once they do, then they'll probably set their stops below where they bought in, right? That's obviously most likely what people do. And so if prices dig in deeper here in the, say, 4-hour daily time frame, this order block will break and the selling will accelerate to the downside. Okay, and the next order block is really just this region right here, probably 5,700 to 6,000 area right here. Okay, which, you know, obviously also happened to be this big choppiness from last year, where prices hit 6,000 multiple times. So I bet there's going to be a lot of people targeting this area right here for prices to sort of stop. On the 4-hour time frame, there's probably a bit of, you know, support right here in this region where prices stopped briefly for 6,400 and maybe, you know, 6,200. So also that area right there. But for the most part, I would say, you know, this is really the region where prices may stop if these candles start breaking down the 4-hour of the daily. Okay. Now another thing that I'm sort of spotting here is like a head and shoulders pattern, kind of like this. Here's your left shoulder, here's your big head right there, and here's that, you know, right shoulder forming too. And you can see that, you know, this head and shoulders, if this right shoulder comes up, you can see again this comes up right around that 7,900, 8,000 area, right? Which again happens to be where this B wave is. Okay, so when you see multiple patterns forming with, you know, Elliott wave counts or even different harmonics, like say the bearish, you know, Gartley patterns that people like to see, that's actually of no surprise, because, you know, more than likely technicals line up, whether it comes to indicators, whether it comes to Elliott wave counts, the Ichimoku clouds, whatever. Okay, all right. So with that being said, you know, we can also see that the Bollinger Band right here, the middle band, is coming to meet price. Currently, it resides around 6,500. So the Bollinger Bands are also a good idea of understanding where price can go in terms of levels to the upside, the middle, or the downside. Okay, if we start looking at this on the 4-hour time frame, prices have already dipped to the bottom of the band. And now to get up above the band, we must first get past about 7,600. Okay, so another level to keep in mind. In our community specifically, I had mentioned this trade. I got in around 71.50 to 72.50, and over here you can see, where'd it go? There we go. Over here you can see once we got in, you know, I saw the first sort of movement on up. I think it was this region right here. And then I saw this higher low being cemented. So I saw, you know, this low right here, this higher low, and then this higher low or higher high right here gave me the confirmation that, all right, well, it looks like we're starting to break this previous swing high structure. We broke this, got another higher high, and now we need to make sure that the next couple of candles close up here. Okay, so remember how I stated 7,600 was where that middle band is. You can see that 7,600 was also the bottom area where this support was found, and essentially this support. Okay, so once that sort of happens, we'll see that prices, you know, once they break past this level, we might see some FOMO from people. This might drive prices around the 8,000 to 8,100 area. And this is really the real test, because you can see there's a lot of chop in this area. You know, chop right here, in this region right here, and in this region before prices fell. Okay, so this is really the big test around this area. Okay, let's check out the 4-hour chart. And actually, going back to this, I mean, I do see sort of a head and shoulders forming on this smaller time frame too. You know, this 15-minute time frame. Here's that head, and this right shoulder might form too. But again, I'm not too concerned about that as long as we sort of keep up with the higher low structure. For the most part, I mean, yes, it's a bit concerning, but I do expect prices to at least, challenge 74, 7,500 maybe in the next 24 hours, if all things go well. Okay, and another thing is that I haven't quite counted out the fact that this could be sort of a big sort of a bear flag as well. Unfortunately, you can't sort of draw this because you do have this big wick poking through the downside. But if you do want to ignore this wick and then sort of catch this movement right here, then you have to sort of draw your pull, or your sort of descending channel, kind of like this. This would essentially be your ending. You got to ignore this wick. And this is really your parallel channel, which is a slight grind up. All right, which is of no surprise because once prices sort of dig in so low, you want to see a deceleration of prices just keep going down. Now it's just like a slow grind and a slow recovery and repair of prices to the upside. All right, here again is one of the reasons why I got into these trades yesterday. More often than not, I've seen Bitcoin sort of outpace, or I'm sorry, Bitcoin Cash, LTC, Ethereum outpace BTC. And then, one of my favorite alts is BAT, not because of, just being obsessed with it, but rather the fact that it has, just really great technicals to be able to trade off. After it sort of bottomed out down here, it's just got some really great strength that's coming out. And, I would say at the very least, I caught this around 364 yesterday in this region. I would say at the very least, my target will be over here on BAT, which is about 46, where multiple candles right here closed. And so, if you do consider buying in right now, even right now from here to here, it's a nice 20% gain. Okay, I got in right around this area right here. So for me, that's about a 20%, 27% rather gain. Okay, and whenever I take trades, guys, I announce it in here, not to tell you to take trades, but rather show you what I'm doing. This group is, again, nothing but my head sort of being broken open and showing you my thought process of how I think, what I operate on in terms of technicals, and whatever my experience has been in terms of knowledge and education, and poured into this area right here. Okay, what I read, what I follow, what resources I use, everything is all available right here. All right. Okay, beyond that, I think I will just get through the, let's see, this is one thing that I wanted to show you guys. Again, on a bigger sort of, time frame, I wanted to show you guys where the Nikkei, had almost a similar parabolic structure that is compared to the BTC chart. So this is, the big run up in 2017 in the Nikkei. This is really your 6,000 level for the Nikkei, or for the BTC. Here's that capitulation where we saw 3,100. Here's that big run up where we are, somewhere near right now. Okay, so remember, guys, that even when you do see a big run up like this, at least in the Nikkei and many other charts that I've seen before, you see a big drop, either retesting the lows, sweeping the lows, meaning breaking through them, hitting all the stops down here, or at the very least, right here, the SPDR chart, where is it? Maybe, oh, sorry, whoops, what am I doing? Which one do I want? There is the SPDR right there. Here's gold right here too, big run up right here. And then you can see, sort of a big drop off, prices boom back up. Again, this is the SIBO chart, but you can see this almost similar to, say, even this one right here. Okay, almost similar, where you have a big run up, you know, price stalls here. This is a monthly chart again, guys, so you know, you can see this is almost reminiscent to BTC, where price holds off on this level, capitulates, goes back up, comes back down again to come, you know, very close to retest these lows, and then sort of moves on away. Okay, but price sort of struggles in this area right here for many months, and this is why I state that even the Nikkei, you can see once we sort of swept the lows, price comes back up here, and then it takes many months to sort of reach the higher highs. And this is why for BTC, I'm still a bit concerned about how we've had this, you know, big run up in price action on the daily chart. At some point, in my opinion, prices should at the very least, you know, maybe reach, say, 9,000 to 10,000, or if they do reach 12,000, prices could still correct back down, maybe even halfway, maybe even to the 618 fib, which could bring us back to 6,000 or 5,000, and then sort of, you know, accumulate a bit more, cause a big stir up and a shakeout, and then, you know, move on away till the halving happens in May 2020 over here. Okay, just something to keep in mind, not you know, definitive in any sense, but just something that I'm still keeping an eye on, and that's why I'm hedging my bets of not just, you know, diving all in and saying that this is the start of the next bull market. Okay, I mean, again, trading is all about risk management. If you don't quite understand how risk management works, again, go to cryptosomniac.com, hit products, and then go to get advantage. All right. For those of you who are free and watching, I will be closing all the Advantage channels today. This is the last day for you to become a paid member. You know, as you can clearly see, these gains are a lot of hard work, and our community and our analysts like Jordan and myself, we have bills to pay, we have, you know, lives that we lead, and, you know, we do our best that we can to provide you as much content as possible, but we can't just do that for free. So I hope you understand. Please do tell your friends. Please give us a like on Facebook, and, you know, share our knowledge, share our analysis with your friends. That's how you can help us pay it forward. Okay. Aside from that, I think this big news right here, I don't know if people caught this, but, you know, this was a Supreme Court judge that essentially helped stall Tether in terms of their movement of money and funds. And I think this movement right here that we saw 2 days ago, in my opinion, you know, is obviously triggered by something like this. Now, what's great about price action and why I've been, you know, short term still bullish towards, you know, that 10,000, 12,000 area is because I still see some strength in price, where even though we have big news like this, the Binance hack, even the Bitfinex, you know, news of losing 850 million, which was over here somewhere, right? The Binance hack was this day right here, and then this is the Bitfinex, you know, order by the Supreme Court. I haven't quite seen, you know, any significant structural issues, and so when you see sort of this kind of movement where the bulls keep pressuring no matter what the bad news is, you know, this is really a strong way to make a statement that the bulls are willing to push prices higher no matter what the bad news is. Because, you know, a good general rule of thumb is that prices do not, you know, reverse trend in terms of, you know, if prices are in a bull market, bad news does not just start a bear market, and vice versa, right? If you're in a bear market, good news, one piece of good news is not going to start a bull market. It's usually a culmination of things where accumulation has happened. There's been a series of, you know, positive news for many months, and all those technical factors and fundamental factors have to line up. It's usually just not one or the other. Okay, so in this, you know, case right here, there was a lot of fundamental development of the space, but also a lot of accumulation happening in this area, and then, you know, finally you saw a big surge of a big buyer when clearly there was some, you know, positive news in the way, whether this person knows about this being the bottom being put in, or, you know, some say government or organization like Fidelity has bought in a lot of BTC, or, they're starting to ramp up investments in the crypto space. This move right here is usually the result of people knowing something more than us, or also more institutions or banks or central banks or governments having accumulated a lot of BTC and now driving up the market. Okay, so remember guys, you have to think in terms of how the smart money thinks, not in terms of how you believe that BTC should be valued higher. Price, the market, the smart traders, the algos do not care what you think. And for the most part, retailers don't move markets anyway. We are really the small fish in a pond full of sharks that are just, sort of getting the scraps from the whales. Okay, so you have to think in terms of what is smart money thinking, and that takes a long time to sort of understand and grasp, right? But anyway, come join our channel, guys. Tons of analysis. I put up the daily BTC analysis and daily updates right here, so you can see exactly what I'm thinking on a day-to-day basis. Every couple hours I provide analysis. Very active in the Cryptosomniac community. A very supportive community at that, and tons of knowledgeable people. So come join and give us a thumbs up, guys. Leave us a comment of where you think prices are going, and I hope to see you in the Cryptosomniac Moon Lodge. All right, take care, cheers, and have a wonderful Saturday.